welcome. This is Dave White sitting in for the one and only Tom O'Brien, and we'll be talking a lot of technology in this hour as we normally do on Friday, just a compacted version of that. And, of course, Tom will be back sitting in the chair doing double duty again next week at both 10 o'clock and 3 o'clock. So we'll give him a little bit of time off. He deserves it. He may be off doing business. I don't know. Anyway, in the meantime, I'm going to do the best I can to give you a full quality 1 hour here. And I'll give it 110%. Don't you hate that when people say 110%? It's like giving you a pie and a half, but you only have a pie. There's no extra half a pie anywhere. I do digress. As we start off the beginning of the show, we are down on the S&P. If you're just tuning in, 16.53 off on the S&P cash at 2092.33 is the last tick. Volume incredibly light as we get into the end of this. It's 1.93 billion shares on the New York Consolidated Tape. If you normally listen to Tom, he talks about the floor traded volume, which is about 1/4 of what's going on. And that is it. We've got just a very light day out here. A lot of people are blaming it on the Greeks and bad news out of that. But we pretty much knew that about 2 o'clock yesterday afternoon. Didn't affect the market all that much. Maybe they just didn't believe the IMF when they said it. Maybe not. I think it has a lot more to do with a bipolar market that just can't get more than 1 day in and thinks that it's time to be manic, depressive. And we get 1 day of manic and blue skies and 1 day of nothing but rain. But what else can you say about it? When we look at the markets, the rest of the markets, of course, a little tougher, off almost 0.9% on the Dow at 17,881. We also have the NASDAQ off 33 at 50.49. which is about 0.6, a little more than 0.6 off. So as we start the show, not a lot to really report. Gold was rather flat at 1180. I haven't looked at it lately, but pretty much flat out here. Actually starting to interest me in the fact that I like stocks. I like everything that goes sideways for a while anyway, building up the steam to actually have a big time. But normally, if you're talking about on a daily chart, you want to see those movements go maybe 5 or 10 days sideways. And we are getting very narrow in that. And a lot of times you get the big breaks out of those kind of movements, especially when everybody gets bored out of it and they start looking at other things, looking for somewhere to put their big toe. Have you ever seen a kid anywhere that's barefoot? He's always looking for any, like a snake hole or anything. He's always a knot in a tree, trying to put his toe anywhere he can. And I think just people in their minds wander and they want to do different stuff. But very interesting day. We were looking at some patterns in the market if you were listening to my show this week. The first one that I wanted to bring up was a big Gartley pattern in Bank of America. This one looks like it's starting to confirm a little bit. It is one of the better looking Gartley patterns that I've seen in a while. And why is that? And that is because between the C and the D point, there has not been a lot of energy. There have been a couple of days when they tried to move these things higher. Just never really got anything that looks to me like a sign of strength going through the B point, although energy was not all that horrible. It just wasn't all that good. You needed you needed 160 million shares going through $16.79, and you got 118. And, basically volume digressed lower through all that period of time. You had kind of a good point out here that looked like, the good part. If you were going to short this, I don't short, $18 stocks, but as a proxy for thinking that financials had come and you pretty much had gotten everything you should expect you should out of them, looked pretty good. So when we go back and look at the XLF, we certainly don't have the volume characteristics that we'd like to see out here normally in the XLF, but interestingly, you had a high volume doji out here yesterday and then a pull right back into the trading range of the XLF. And that probably tells you that you're not going to get your breakout anytime soon. Volume wasn't light out here, but you may need to pull back a little bit more and take one more run at this to see whether or not you're going to get it. Normally, when you get these high volume attempts that pull right back into the trading range, you get one more attempt, and normally the volume falls out at that part, and you finally get the failure of the stock, or you get a lot of volume and you get a sign of strength out here. So the next real move in the XLF is going to be incredibly important for everyone. Again, as we look at the markets, we'll call them out here, but doesn't look like a lot of juice to blow out the end of this market, but doesn't look like a lot of people trying to get in front of it. We'll be talking a lot about technology today also as we go through the day. And I don't know what else you can say. Maybe we'll start right now. You can always give me a call at 877-927-6648. If you'd like to talk about a fundamental reason of technology, which is more about what we talk about on Fridays than a straight technical one, or if you want a combination of the two, just so it's a little bit of a fundamental understanding of technology, which we'd like to speak about on Fridays. Go ahead and give us a call at 877-927-6648. In the meanwhile, we'll get started with snooze. As always, when news breaks, we're here to fix it at TFNN. And today, probably the first thing on my list of things to talk about is this virus test. If you've not heard about it, I think the news came out either Monday or Tuesday of last week. I didn't get to it in last week's Tech Insider, but I think it has a lot of implications for the biotech sector. And what it is a DNA test for viruses. And since viruses are all very similar, you can give this one single test, and there's not a lot to a virus DNA. It's pretty short, can actually be tested. But you can find out any kind of virus that that person's ever had, ever, with one test. The test also is being highly used in Europe, but not over here in the United States. But only $25 at the present time. It's going through a lot more testing in Europe. May come over here, but there are a lot of very expensive tests, AIDS tests, other things like that, that this could easily wipe out. And of course, if you find out, I think there were somewhere around, it actually says here, 206 species of known viruses that can infect human. If you've had any of these in the last 20 years, it will show up in this scan, which is going to be very nice. Instead of having very targeted tests for viruses and the various viruses out there, this one test at $25 can find out if you've ever had any of them or if you've got them now, especially in things like hepatitis C, where early warning signs of finding out about drugs like that can really help people in the fact that now there's actually pretty much a cure for hepatitis C. Can get you on those drugs long before a great deal of damage is done. Unlike years past, I've got a good friend that I used to ride motorcycles with, and he unfortunately had a long time before any of these drugs were available. And you end up having a lot of debilitating side effects of it, mostly blindness and other things like that. Over time, you can get 15 or 20 years. It's not one that kills you instantly, but it kills you slowly, and that takes away a lot of the things that make life fun. But it's called VIRSCAN, VIRSCAN. This could be, because it's just a test and it doesn't hurt anybody, all you need is a single drop of blood, could affect a lot of these companies that heavily depend on very expensive scans, at least for viruses. We still go back to bacteria, which is a much bigger deal, but it seems all the bad things are really like viruses. Bacteria, seems like most of the time you get past those. Viruses, pretty bad stuff. We'll be back.